Hi, this is Alvin from Dr. Wealth, and I just heard about the First REIT rights issue, and some of the unit holders may be wondering what this is all about, and I want to give you a very quick explanation, and so that you can make a better informed decision on what to do with it. The usual disclaimer: pause and read it. Okay, what I did was I went to download the announcement by First REIT, and I wanted to highlight some of the key points and to go through with you quickly the document what it's trying to say. First, it is a renounceable rights issue, so that means that this rights issue the rights will actually be traded on SGX. If you do not want to subscribe to the rights, you can actually sell them and get back some cash. This is more favorable because to prevent you from being diluted massively if you do not want to subscribe to it. Okay, why do I say massively? Later I'll explain why. All right, this is part of the purpose of this rights issue is to repay part of the $400 million loan by OCBC and among other financial institutions. Right, in more detail, they're going to raise about $158 million from this rights issue. Right, out of which $140 million will be used to repay the debt, and there'll be some fees for the rights issue, and then there'll be some fees for the restructuring costs, and then lastly they'll keep about $9.3 million for day-to-day operations needs. Most important number, right? This is 20 cents per new unit. Okay, so if you want to subscribe to the rights, you need to pay 20 cents for every new unit that you're gonna get. Okay, and how many units are you gonna get? You're gonna get 98 rights unit for every 100 units that you own. Okay, so you have 1,000 units, you're gonna get 980 rights unit, and then to subscribe to everything, you need to just take 980 units multiplied by 20 cents in order to get amount of cash that you need to put up for this exercise. Okay, why I say it's massively dilutive, right, is because this is a very low price considering that the last closing price was 40.5 cents, right? So it's like 50% discount. And most importantly, I would say that because the book value or the net asset value is about 36 cents, and there's still a 44% against its net asset value. So I do think that this 20 cents is very cheap. Okay, and I thought that if they do something like 30 cents and above, they still be able to pull it off. All right, but I don't know how they arrive with this number. Okay, maybe they really want to entice unit holders to subscribe to it. All right, but this is the figures. So if you do not want to subscribe to it, please at least go and sell the right shares once it starts trading. Right, I don't have the dates yet because they are not released at this point in time. This is what the numbers will look like pre and post the restructuring and the rights issue. So you can see that at the moment it's about 35% gearing ratio. All right, and after the restructuring, you'll go up to about 49%. And for REITs in Singapore, MES has recently increased the gearing ratio to 50%. So actually it's still passed under the new number, but in the long run, it's supposed to be about 45%. It's because of the COVID-19, MES raised the cap. So which means if based on 45%, this restructuring, the debt ratio will fail the long-term targets. All right, and that's why they need to lower this number, and one way to lower it is to do a rights issue. So that's one of the reasons or the key reason why this rights issue is going on. And after the rights issue, you can see that the ratio goes back down to about 34%, right, which is like a pre-restructuring kind of levels. So that is the key reasons that I believe they are doing this. Okay. And some good news is that the manager, First REIT Management Limited, has promised to subscribe to the rights that are given to them because they have about 9% stake in First REIT. So they're going to get some of these rights units as well. And they have promised to subscribe not less than the amount that they're given to. And which means that if they want to subscribe more, they can, right? Provided some other unit holders do not want their units. Likewise for OUE Depot Healthcare, they have about 10% stake. Okay, they have promised to undertake the rights unit that's assigned to them, right? And the parent of the parent, which is your OUE, okay, will have the indirect ownership of about close to 20%. So they have also, of course, make the promise that they will subscribe to everything they're being assigned to, right, via their subsidiaries. Okay. But this rights issue isn't confirmed yet, by the way, right? Two things have to happen. An EGM has to be convened, and the two resolutions have to be passed. So the first resolution is that the restructuring has to take place, right? Has to be approved in order for the rights issue to go through. Because if they don't restructure, the debt level is not going to go up, and then defeats the purpose of the rights issue, right? And then the second is that they are going to call for a whitewash resolution. Okay, so what is this whitewash resolution, right? Basically, what it means is that for substantial shareholders like OUE, even though it's an indirect ownership, when they when they have to acquire a big number of units, right? In this case, in the rights issue, they promise to subscribe to the rights units. That means the is actually acquiring quite a sizable amount of units from First REIT. Okay, and in that case, by law, they're supposed to give a mandatory offer to all the other unit holders, right? But OUE has no intention to do so, right? And that's why they ask for this whitewash resolution, and only if this is approved, then the rights issue will go on. Okay, so these two resolutions will need at least 50% of the voting in order for them to be passed. Okay, and the dates, if you want to attend the meeting, you want to register for it, or you want to just vote the forms, or you want to assign somebody, all right, a proxy. Okay, you need to submit to them by 16 Jan. Just take note, this is if your shares are stored in CDP, this is the deadline. But if your shares are stored with the broker, if it's a custodian account, usually your broker will have a different date that is earlier than 16 Jan. So do take note of the expiry date. Okay, and lastly, the EGM will be convened on 19 January, right? That's where the voting will begin. Okay, and the market didn't like what they have seen on the rights issue, and they punished the share price today. Just past the lunch and the afternoon trading session, First REIT has already down 33%. Okay, definitely this is not a good sign. All right, the market doesn't really like this rights issue itself. And I also went to do a quick comparison with Parkway Life REIT, which is the other healthcare REIT that's listed on SGX. So it is the green line. All right, this is your Parkway Life REIT. Okay, and then the red line is your First REIT. Right, so since 2008, you can see that the share price have been performing quite well, right? Both of the REITs, and in fact, it's in tandem. They rise together, fall together. In fact, there was a period around 2014 to 2018. All right, you can see that the red line was above the green line, such that First REIT was actually outperforming your Parkway Life REIT. It was only until around late 2018, okay, that the divergence of performance started to happen, where Parkway Life REIT went up and then First REIT went down. I think it got to do with the situation in Indonesia. All right, the operator is a Lippo Karawaci, and it's not doing that well, right? For the past few years, and their operations have been suffering. And the tenants of all these hospitals that's being held by First REIT. So if the operator is not doing well, that also mean that the ability for them to pay rent has reduced tremendously. And COVID-19 was the straw that broke the camel's back, whereby this operator really suffered a lot of cash flow problems, right? Because people are not going to all these hospitals to get treatment because they are staying at home, all right? Especially if the cases are not non-urgent, right? They will stop visiting all these private hospitals, and that means lost income, lost revenue for operator, and that's why the restructuring has to happen, and all these new deals have to be struck, which is not that good for First REIT unit holders. All right, so that's why the share price has been punished quite badly since especially the start of this year when the COVID-19 happened. All right. So in summary, the rights will be issued at 20 cents, okay, each, and you're going to get 98 units for every 100 units you hold. It's not confirmed yet until the EGM is held on 19 Jan to pass the two resolution, right, in order for the rights issue to carry on. And once it's carried on, you have more dates, like when is the trading period, and because it's renounceable, means you can sell the rights even if you do not want to subscribe it, so that at least you get back some cash. So it's very important that you do either, okay, either sell the rights or you subscribe to the rights, right? Because it's pretty dilutive in this sense, if you ask me. Okay. Of course, the fundamentals of First Street doesn't look that nice anymore, right? Given the situation in Indonesia is not that rosy. Okay. Personally, I have no stake in First Street. Because I all along don't really like the fundamentals and the business out of it, right? But if you have it, then you have to rethink. If anything have really changed, is it a permanent issue that they're gonna face? That maybe can help you make your decision better. All right. So I hope I have done a quick summary, and it has really improved your understanding of what's going on for this rights issue, and hopefully you make the good decision out of it. All right. It doesn't matter whether I have the stock or not. Okay. Most importantly, if you have the stock, make the best decision that you can. Okay. Thank you, and that's all from me, and I'll see you next time. Cheers.